What is up, YouTube? It's your boy Styx. So I got another little video for y'all, another intro to trading. So another beginning video. This is going to be the episode 2. On the last episode, I went over trend lines, where you could draw them, and what you can use trend lines for. And that is basically to get an entry and an exit price or a target. All right, roll the intro. All right, again. So on the last one, we went over the trend lines and where you can, using trend lines, where you can go into a trade or where you can exit a trade. So for examples, you can see it's touched here quite a bit, bounced, touched here again, bounced back down, touched here, kind of broke a little bit and then went back down, touched it again, went back down. Here, let me erase the circle, it broke past here and then it climbed back up and then touched here, went back down, touched here, broke a little bit, now it's going back down. So this line was a pretty strong resistance. This line was a pretty strong support, as I've covered in my previous video. And if you haven't seen the previous video, the episode 1, Intro to Trading, which is very basic, trying to understand trend lines, go ahead and watch it. I'll post the link in the description. So how do we get a target price then? How do we get where to enter and where to exit? So at the most basic level, let's do it here. You can do this. So you see it going here, it broke past the resistance, it hit the this resistance, now it's going back down. Previous resistances turn into new supports. All right, remember that. Previous resistances turn into new supports. Before, this was a resistance. It hit here, went back down, almost hit here, went back down, hit here, went back down. So this was a resistance. Now that it broke past that, it turns into a support because it's a psychological price level. So now that you see that it's coming down, pretend that, it's coming down here. You see that it's coming down. Okay, now it touched here. Now you can say to yourself, okay, well, now that it's at a previous, now that it's at a support, we can determine that if it, let me draw these little circles first, that if it bounces back into this level, I will enter my trade. And if it bounces or if it drops to this level, I will go ahead and pull out. In other words, let's say that it hits here. You have to wait for it to bounce, though. Okay, so it hits here first. Let me just go ahead and do this here like that so you guys can see what I'm talking about. Come on. Come on. You can do it, Styx. There we go. All right, so pretend you don't see the stock. All right, pretend this is not here. So you see it dropping, and then all of a sudden you see it bouncing. Now it's bouncing from this support, this line right here. This is a support line. It's bouncing up. All of a sudden it touches your entry target window, which is this circle I've drawn up here. So then now you can say to yourself, okay, cool, I'm going to buy. So you buy, I don't know, however many shares you can afford, right? By the way, we'll go over how many you should afford, how many shares your position that you should enter in. That's going to be episode 3. So we'll discuss that later. So you will buy your shares and then you would hold them. Now your target price is here, right? Because you've drawn your line and you're saying, okay, well, I believe it could possibly touch here. I believe it could touch here. But mentally, you have to set a stop loss, meaning just how far you're willing to let it go down before you're saying, okay, my trade was wrong. I got to get out at this point. That's this. All right, so you're here. And these change, by the way. This stop loss changes. The higher you go, the higher it's going, you want to move your stop loss up as well, right? Because you don't want to just wait for it to hit here and all of a sudden it goes down and you're going to wait for it to hit all the way here before you stop out, meaning before you sell your shares. No, you want to get some money, right? So this moves along with your stock price. So let's say it went up here. Now, let me delete this. Now my stop loss, that's what this bottom circle represents, is moving too. So this is up here. My stop loss is moving too. It's moving too. I see it went down a little bit. It didn't hit my stop loss though, right? It stayed right there. Now it's going back up. So you're like, okay, cool. I'm going to leave my stop loss right here, right? Now, as you see it going down, all of a sudden it touches your stop loss, then you sell. So that is your exit price because you don't want to lose whatever money you've gained from here to here, right? So now you would sell it. And then you notice here that it touched it again, and you're thinking, okay, well, it's kind of staying around that level, so I'm not exactly going to buy yet. I'm not going to buy just yet. Now you see it bouncing up, and now you're thinking to yourself, okay, again, remember your entry, your entry range, and this is your stop range, right? So you see your entry range, and you're thinking, okay, well, hell, it hit it again. I'm going to buy it. I'm going to buy again, right? Because you made a little bit of money here, right? So now you're buying in again at this price range. So let's say you bought, it hit the support is at 29.12 and it hit 29.63, 29.56, something like that. All right, so you bought another round of shares. Your target again is here. This is where you want to sell, right? At least in your head, that's where you want it. That's where you want the stock to reach because you saw that before it reached it, but then it fell. So you're going to anticipate that as well. That it's going to reach it and it might fall. But that doesn't mean you're going to necessarily sell as soon as it touches here. You're going to wait for it to start falling a little bit and then you get out. All right. So you see it going up. You bought already. Let me go ahead and exit here or delete that. You bought already. It's going up. It's going up. It's going up. It's going up. It continues to go up. It continues to go up. Now you're really in the money. You're really making money now because your entry was here. Let me just move it along the timeline. Oh, shoot. I'm sorry. Sorry about that. So now your entries, your entry was here. So look at all that money you've made. This is your target exit, right? So you saw, come on, button, damn. So you saw that it hit here, but then you see that it's falling down. Well, you're not going to wait for it to just crash, right? That'd be stupid. You want to collect your money that you've made from here to about right here. As you see that it passed your target, you go ahead and pull out. So now that you sold, so now you've made, and this is a rough estimate, from here to here, you've made about 13%, 13.5, something like that. So that's not bad. That's not bad at all, right? So then you're thinking, okay, cool, it hit here, it hit here, and now it started to go back down. So you sold already. Now you're gonna wait. Now you're waiting for it to go back down here again. So you're waiting, you're waiting, you're waiting. Oh, look at that. You saw that it broke through, but then look at it. All of a sudden it starts falling back down. So you're waiting, and it's still trying to break through. Okay, you're still waiting, and then all of a sudden you see it. Okay, well, wow, look at it dip. It's dipping quite a bit. Oh, wow, it broke past, excuse me. It broke past, but let's pretend that we don't see the future here. So you would make, again, your little entry target, your target and your stop loss. So this is where you want to go in. This is where you stop out, meaning that, okay, your trade was wrong and you're going to pull out. All right. So let's say you saw it go down and then you see that it's going up. It's bouncing and you're like, oh, well, hell, it's bouncing back up. I expect it to keep on going up. I'm going to buy right here. All right. So you bought in right here. So you bought in however many shares you can afford right there. Now, this is something that can happen. When you bought, at the end of the day, right here, the gray area is after hours. The dark area is the actual trade day trade, whatever. Actually, I think I said that backwards. I'm sorry. Yeah, I said it right. So now here we are. You bought in here, but look at where it opens. You see that it's crashing, but you can't exit here because it's after hours, right? You can't exit. Now you're watching it crash. So what are you going to do? You're going to immediately exit. If you see it continue to go down, excuse me, if you see that it's continuing to go down, you're going to exit on this candle, right? You're not going to keep on holding it. We don't bag hold here. Either you're right or you're out. That's the rule. Start getting into that psychology. Follow your rules 100% of the time. I'm telling you, it's going to make you a consistent trader where your losses are going to be minimal and your wins are going to be huge because you're going to let them ride. You're going to let those wins keep on riding up. So you're going to stop out right here. Now, let's remember your win was 13.5%. Now, this is going to be a loss, but oops, your loss is going to be 3.2%, 3.7%. Let's go 4%. All right, so your loss is 4%. You made 13%. Minus 4%, you're still at 9% positive. That's how you keep a consistent green uh, budget or a consistent win at the end of the week, is by constantly making sure that your entries and your stop losses are set in stone for your stop loss. You don't move this unless you're going up, right? You're not gonna, it's not gonna keep crashing down and you're gonna move it down. No, you only move it when you're making money. That way, if it crashes down, you're gonna exit right there as it passes through. All right. So unfortunately, whenever you're trading and you buy something after hours, if it crashes, there's not much you can do until the end of the, at least with TOS and TD Ameritrade, until the end of the until the beginning of the next business hour, the next market open. All right. So let's say you sold here and you're like, bummer, that sucked. I didn't get a chance to make money that time. I lost 4%, but that's okay because you're still in the month, you're still green, right? So then you're gonna keep an eyeball on it. It crashed more, and you're thanking yourself at this point. Good, I made a right decision. I stopped out where I was supposed to. I followed my rules, and I saved more money. Because if you didn't, you probably would have lost 9%, right? Instead, you kept it small. You only lost 4%. All right. So then you're following, and you see that it crashed more. Now it's going back up, and here's your support. Now it becomes a resistance, but you see that it cracked it. It went straight through it. So you're thinking to yourself, okay, I'm going to repeat it. I believe that it's going to go back up. It cracked this resistance with such a strong force. You see it going back up, going back up. So you buy again because it passed your target window. This is your stop loss. This is your target window. Well, you buy here, right? Around your target price range, you buy. Now, let's delete the target price range because you already own those shares. So now it's going up, and this is going to follow through. This is your stop loss, meaning that if it continues to drop here and it touches here, you're going to sell, right? So now it's going up, and at the same time, you're moving your stop loss up, right? So it keeps going up, it keeps going up, it keeps going up. Now you're in your head, you're thinking, okay, well, this was my previous resistance, right? It's touched it here. You've played it along already. Here's your resistance. So that's going to be, you're going to keep an eyeball on this because that's going to be around the price range that you're probably going to try to sell. But you're going to keep an eyeball on it, make sure that it's not dropping. Now look at this candle. This is called a doji. We'll go over candles in probably the next video, episode 5 or maybe 6. Anyway, but this should tell you something. Something's not looking right. Something doesn't look healthy, right? But let's say you don't sell. Let's say you didn't sell. All right. Let's say you didn't sell. You saw that it went past and all of a sudden starts to go down. Anyway, it closed. Bummer. Now look at it dip. Remember, your price range, you're moving it up as well, right? But look at it dip. Look at it dip. Now it opens. Now what happens? You still haven't sold because it hasn't touched your stop loss. You still haven't sold, right? Now, if this continued to go down and it hits your stop loss range, you definitely would sell because at least you'll catch 12%, right? But it doesn't do that. Instead, it goes up and it keeps going up. Here's your previous resistance and it keeps going up. Now, you can ask yourself at this point, remember, this is today. This is AMD today. At this point, before the market closes, you can think, damn it, you can ask yourself this question. In the past, it's touched it and it's fell back down. Not today, but yesterday, it touched it and it fell back down. You can see that it's touched it, it broke past it, and now it's going back down. So before the market closes, you can make the decision. Okay, you know what? I'm happy. I'm making so far on AMD. I am making, if I sell now, I'll make 16%. I'll play it safe and I'll go ahead and sell my share before market closes. I'll sell it right now. Boom, you're in your pocket. You have an additional 16%. Congratulations, you just made 16%, right? Or you can say, hey, it's doing pretty good. I'm still not at my stop loss. Stop loss is down here. It never hit my stop loss, so I'll swing it. I'll go ahead and keep on swinging it. I'm more of a conservative trader. I like to keep my wins large. 16% is pretty nice, especially if you drop, $10,000. There you go. You made $1,600, $1,600, right? In about, I don't know, 2-3 days, whatever. So then that's you can ask yourself, okay, do I want to play it safe, seeing how it's touched that level and it's fell back down, and go ahead and collect my money now, or I'll swing it and see what Monday brings. Now, remember, after hours you can't exit. So if by Monday it drops to here, that's too bad. It touched it, it went past it. Now you're gonna have to go ahead and exit around that price level, and you lost whatever you had gained. But at the same time, it could also go up, and of course your stop loss will move up with the stock itself. I hope this gives a little explanation. This is like the most basic of entry and exits based on the trendline video that I did, uh, I think last week. But yeah, so hopefully that gives you an idea. The next video will probably be about how to determine the amount of stock you should buy, uh, especially when you have a small account. I have a different view on this. This is my own personal view. I'm not giving you financial advice, but just keep an open mind on that. Also, if you would please follow the social medias, Instagram, the YouTube, hit a like, subscribe, all that good stuff. Thank you so much. Hope you enjoy. Have a good day. Peace.